Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, the focus is on November 2025 inflation breakdown, softer headlines, firmer monthly pressures. The National Bureau of Statistics, NBS, published the November 2025 inflation report. The report showed a continued easing in Nigeria's inflation rate. The headline inflation for November came in at 14.45% year-on-year, down from 16.05% in October 2025, the eighth consecutive decline, mainly driven by a decline in food inflation and base effects from a new 2024 base year. However, on a month-on-month basis, prices rose 1.22% in November, higher than 0.93% month-on-month in October 2025, showing that prices increased faster in November than in the previous month. The moderation can be attributed to stabilizing foreign exchange rates, softer energy costs, and seasonal harvest influences, which helped offset lingering pressures from food items and services. Food and non-alcoholic beverages, restaurants and accommodation services, and transport were the main contributors to the headline inflation, accounting for a combined 9.19%. Conversely, food inflation, which accounts for about 45.3% of the headline inflation basket, eased sharply to 11.08% year-on-year in November 2025, down from 13.12% in October 2025. On a month-on-month basis, food prices rose by 1.13% in November compared to a decline of 0.37% in October 2025, with the uptick in prices of items like tomatoes, dried, cassava tuber, periwinkle shelled, grounded pepper, eggs, crayfish, melon, egusi unshelled, oxtail, and onions fresh, providing some counter pressure. This decline in food inflation indicates better supply chains and the start of harvests in key regions amid heightened insecurity in food-producing regions. Similarly, core inflation, which excludes food and energy prices, fell to 18.04% year-on-year in November 2025 from 18.69% in October 2025, a decrease of 0.65 percentage points. On a month-on-month basis, core inflation eased to 1.28% in November 2025 from 1.42% in October. This was driven by slower increases in service-related items, supported by better FX liquidity and lower import costs. States with the highest year-on-year inflation include Rivers 17.8%, Ogun 17.7%, and Ekiti 16.8%. The states with the lowest year-on-year inflation are Plateau 9.1%, Kebbi 10.3%, and Katsina 10.6%. Urban inflation stood at 13.6% year-on-year with a month-on-month rate of 0.95%, while rural inflation was higher at 15.2% year-on-year with a month-on-month rate of 1.9%, highlighting a disparity where rural areas experience faster price increases, possibly due to agricultural supply chain variations. Also notable is the impact of the base year change from 2009 to 2024, which has amplified the apparent year-on-year declines, though underlying pressures remain in seasonal items. We anticipate a further decline in the year-on-year inflation rate in December, driven by ongoing foreign exchange stability, falling petroleum prices, and the benefits of the peak harvest season for staple crops. However, we also expect heightened month-on-month pressure due to increased demand for food items during the festive season, as households prepare in advance, potentially exacerbated by holiday travel and gifting. Investment strategies to hedge against inflation. Despite the welcome decline in inflation, investors should avoid parking idle funds in low-yield savings accounts. Opt for high-yield savings accounts or trusted digital platforms that offer competitive rates above inflation. Treasury bills remain appealing with yield in secondary market above inflation. This is accessible for 100,000 naira via banks and investment firms, alongside investment-grade commercial papers for short-term liquidity. For inflation protection amid naira volatility, dollar-denominated assets like Eurobonds or dollar mutual funds are prudent hedges. High-risk long-term investors might eye undervalued Nigerian and U.S. equities with robust fundamentals, such as those in consumer goods, telecoms, and tech sectors poised for post-inflation recovery. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070824634747. Stay blessed and have a great week. Bye.